please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The World Economic Forum kicks off. We got the top boss of Tata Sons to talk about the road forward. A lot of interesting points coming in, and of course we will bring you excerpts of that exclusive interview through the day and tomorrow as well. But the countdown to February 1st has well and truly begun. In less than 9 days, Finance Minister Arun Jaitley will table the union budget for financial year 19. And from what we are picking up from sources, the government is gearing up for a paradigm shift as far as its divestment policy is concerned. We learned that the government might set a higher divestment target for itself for the year FY19. Sapna Das is breaking that story exclusively for us. Sapna, what's the target and what are your sources telling you?
Well, very clearly, before we come to the target, the point here is that if you look at the HPCL ONDC deal, which has been a mega success, this basically sets a precedent in terms of probably a further push towards consolidation among the CPSE space. Clearly, the government's intent here has been to create value, and that's what they are now targeting. They are expected to target in a bigger fashion in the new financial year, basically creating value for CPSEs and hence via that also for government equity, the government stakes that are still held in various CPSEs. So it's going to be a very clear-cut, a well-intentioned, a well-directed policy, and FY18 has been a huge year for disinvestment to mark that as a precedent and to set the stage for the years to follow. Having said that, well, it's going to be an evenly balanced target, most likely, between strategic stake sales as well as your minority stake sales. Though, of course, people keep questioning that, you know, in terms of minority stake sales, you know, how much of space still remains for the government to actually go great guns on that. But FY19 still, the disinvestment target is going to be very, very important from that point of view. We also understand a couple of fresh offerings would be there, though, of course, some of them they have not been able to complete in the current financial year. And hence, if you look at the way they have gone ahead in January, they have exceeded the, the budget estimate of 70,500 crores by over 20,000 crores, and still 2 months remains for this financial year to be over. People have been talking about a figure of 1 lakh crores, so you never know. That may be what the government may just have put in those budget papers. And even if they haven't, well, the fact remains that they have actually overachieved the target in this year, and you never know. Even if they keep a very balanced budget estimate, every possibility of exceeding that in FY19 as well. So clearly the focus will be in terms of CPSEs, creating value for them, further push to consolidation. Also, those CPSEs who are not using the surplus cash for business expansion or M&A, the buyback strategy is very much going to continue. So it's going to be all in all a very rounded disinvestment policy for FY19, and this should not surprise anybody.
Okay, fair enough. That is a significant change there, Sapna. Thanks for joining in and taking us through what you're picking up from your sources. We will have to take a very short break though, but coming up next, bulls continue their record-breaking sweep. Both the Sensex and the Nifty hit fresh lifetime highs. All the market action ahead on the other side of this short break. Welcome back. Now it's the start of a new week, but the last day seemed to have taken off from where it left off last Friday. The markets today shrugged off any signs of Monday blues with a stellar rally across all major indices. So let's pull those up for you. Nifty hit a fresh record high yet again, gaining about 70 points in trade. That index is now within hissing distance of that 11,000 mark. Sensex also following suit with a 280-point gain. The mid-caps came in late to the party, but they also ended with gains of 1%. The Bank Nifty saw a mild underperformance with gains of about 0.5%, but then again in select stocks there was cheering across the board. Anuj Singhal is here to decode today's market action for us. Anuj, bulls clearly continue to make merry.
Well, big surge to all-time high for the market. This is what melt-up feels like. This is what, a lot of people have been talking about. A lot of large caps moving, a lot of mid caps moving, and the market's just making mockery of levels one after the other. It was just a while back that we were talking about 10,500 on the Nifty. Now 11,000 is a possibility. Could happen tomorrow in the first trade itself. And really, the way you should look at the market today is the two largest stocks, TCS and Reliance. It looks like a bit of a Tata versus Ambani battle out there to be the most valued company. Both hitting market cap of 6 lakh crores, both surging 4% in trade today. Apart from that, of course, you had some other big gainers like Indiabulls Housing, Axis and ONGC. The sector of the day, of course, was IT, led by TCS, of course, but others like Infosys, HCL Tech, and Tech Mahindra also did well. And in the mid-cap IT basket, of course, you had stocks like Mindtree, NIIT Tech, and Tata LXI. Of course, outside the index, big gainers like Jubilant Food, Just Dial, and Biocon. It's a matter of time before we hit 11,000. Could happen tomorrow itself. The countdown to 40,000 on the Sensex may well have started. As I said, this is a bit of a melt-up. Let's see if it has more legs.
Okay, Anush, thanks for taking us through that. So 11,000 possibly could be around the corner, but let's move on to earnings corner. Axis Bank, which came out with its third quarter numbers today, managed to beat street expectations on most parameters. So its net profit surged by more than 25% compared to the same quarter last fiscal. Meanwhile, its net interest income, that's the core income a bank earns by giving loans, was up over 9% on an annual basis. This can be attributed to a strong loan growth that the company saw, which came at 21% annually. Let's now talk about asset quality. Axis Bank saw its asset quality improve in the third quarter. Its gross non-performing assets stood at 5.28% compared to 5.90% the previous quarter. That's not all. Its provisions, which is what banks set aside to provide for NPA accounts, were also lesser compared to the second quarter. So that is the big earnings of the day. But let's take a look at the national headlines of the day as well. The 20 Aam Aadmi Party MLAs who were disqualified last week for holding offices of profit withdrew their petition from the Delhi High Court against the order. They will now file a fresh petition, and we learn from sources, the Aam Aadmi Party sources say that the petitions were filed on January 19 to seek a stay on Election Commission's recommendations of their disqualification, and it was withdrawn keeping in view the developments yesterday as their application had become infructuous. Meanwhile, a new three-judge bench headed by Chief Justice of India, Deepak Mishra, will begin Loya death case hearing on the 2nd of February. Today, the court said that it will assess everything dispassionately and will also examine news reports related to the matter. The bench has also decided that there won't be a gag order against media in this case. Even after receiving a green signal from the Supreme Court, it's not smooth sailing for controversial film Padmavat. Rajasthan and Madhya Pradesh governments have now approached the Supreme Court to seek a ban for the movie, citing law and order issues. The apex court will hear their appeal tomorrow. Meanwhile, Karni Sena has intensified its protests against the movie. The group has vandalized several theatres across the country. Well, let's get back to Budget Corner. The last financial year has been a tough one for South India's silk industry, mainly because the switch to GST, raw silk and silk products are being taxed at 5%. Now, when such a tax did not exist earlier, no surprise then that this has become a big talking point for the industry as a union budget rolls around. But CNBC TV 18's Budget Caravan found that the rollback of this tax is just one of the many demands the weavers and silk industry players have of the finance minister.
This is T Nagar in Chennai, a hub for Tamil Nadu's silk industry. It may not be as big as Kanchipuram, but it is a nerve centre for the industry and deals with a sizable portion of the 30,000 tons of silk produced in the country every year. But this year the players here are not a happy lot. Ever since the GST rollout in July, it's been a rough 6 months for the silk industry. There's a 5% tax on both handloom products and raw silk, a levy that did not exist pre-GST. Retailers now say that coupled with demonetization, this tax alone has played spoilsport for recently concluded festive sales. The tax has led to retailers stapling price tags that are 5 to 8% higher on their silk merchandise. So a week after Chennai's Pongal festivities have died down, silk sari retailers say that statewide sales have been muted this year. Mass market brands like Pothys have reported a 10% fall in festive sales, while premium brands like Nalli are seeing flat sales in smaller showrooms. Silk weavers and traders say that the new tax under GST has to go because it's wiping away any benefits that other portions of the silk supply chain enjoy.
If you look at the silk industry, at the cocoon level, they are giving the subsidy. At the reeling level, they are giving the subsidy. At the weaving level, the state government is giving subsidy. You are trying to promote them on one hand, and on the other side, you are taxing them. There is a dichotomy that has to be resolved, that has to be addressed to.
But scrapping the GST on silk is just one of demands from Chennai Silk Hub. The industry has been lobbying for the establishment of more cooperative societies to incentivize silk weaving. Also on the wish list, government support in taking silk exports to markets beyond USA and Europe. This move, they say, will see a weaving hub like Kanchipuram improve its contribution to India's $300 million silk export industry from the current 13%. They also ask that the government come up with specific incentives for weaving silk ready-mades, which accounts for 50% of the export trade. However, should the GST on silk remain, industry says the government must help smooth out problems with tax compliance.
It is even more important that they have facilitation center because the process has gotten that much harder. So for large weavers who have systems, it's not a problem, but for smaller weavers who don't have any infrastructure, it is a problem.
So the consensus on Budget 2018 is quite clear. Either exempt raw silk from the GST or provide for easier tax compliance. But this, of course, in addition to introducing measures that aim to promote silk, like launching new cooperative societies or exploring newer export markets. In Chennai, this is Jude Sanath.
Okay, from Budget Caravan, let's talk about the big global headline. The US government shutdown has entered its third day. This as the Senate has failed to strike a deal to break an impasse. Senate Majority Leader Mitch McConnell is likely to advance a stopgap spending bill later today, which could end the shutdown. CNBC's Kayla Tosh, who has been tracking these developments, gets us the latest.
Last night, the Senate failing to reach a deal they had originally expected to vote at 1 a.m. this morning. So now federal workers are waking up to a shutdown today, a day that many of them were expecting to go into work. But there is expected to be a vote today at noon. And here's this new proposal that Senate leaders have been talking about. It would fund the government until February 8th. That's a week shorter than the previous bill. But it still includes funding for children's health insurance, which ran out on Friday. Majority Leader Mitch McConnell has now said he's committed to bringing a bill fixing protections for children of undocumented immigrants, as well as reaching agreements on a whole host of other issues before that next deadline comes around.
When the Democrat filibuster of the government funding bill ends, when it comes to an end, the serious bipartisan negotiations that have been going on for months now to resolve our unfinished business, military spending, disaster relief, health care, immigration, and border security will continue. It would be my intention to resolve these issues as quickly as possible so that we can move on to other business that's important to our country.
So that is a long list of unfinished business. Dealmaking over the weekend, though, was largely carried out by a bipartisan group of nearly 24 lawmakers, shuffling between the offices of the two-party leaders. McConnell and Schumer, the top Senate Democrat, met Sunday but did not broker a deal. Members of this deal-making group said it's still unclear what immigration deal the president and his advisors would agree to.
Okay, so that was a check of day 3 of the US government shutdown. We will, of course, be tracking the story very closely. But for now, it's time to wrap up this edition of What's All. Thank you so much for watching. Up next, the bulls continue their party on the Lal Street. Both the Sensex and the Nifty hit fresh lifetime highs. Markets today, Talkback will take all the action ahead. And in 30 minutes, we'll be back with India Business Hour with the top stories and, of course, all the action from the World Economic Forum. Stay tuned.